Crypto indicators are broken. The global M2, the pi cycle top indicator, and the 1 year moving average. Why does it feel like all of these were once commonly spoke about, but now that since they've stopped working, everyone seems to be ignoring them? Is it because of confirmation bias? Is it because people want to remain bullish even though everything possibly screaming being bearish? Or is it because of a much bigger and better reason? Well, I'm gonna really try to help you understand and break that down today, but more importantly, I want to give you the power back. And so I've got a whole bunch of really useful indicators when used together that you can use at home right away completely for free. And then I want to talk about what all this means for our altcoin bags over the next few months as well. So if you like the sound of that, make sure you hit that like button. It does go a long way to supporting all I do. And stick around. Let's begin. I get it, it's frustrating because you listen to YouTubers or guys on Twitter and they'll tell you about why indicators are important, and then all of a sudden when the indicator stops working or it proves the opposite of what they're trying to prove, which is if it signals bearish and they're bullish, okay, it feels like they're moving the line in the sand. Oh, we're not going to worry about this indicator anymore because you know what? It doesn't fit my confirmation bias. And this is human nature, and I think it's really hard not to do that, no matter who you are. And so that's why I've put together a list of actually useful indicators for you today, and then I'll go into what that means for altcoins later on. Because again, indicator lists like this actually aren't that useful, and people are, I think, inaccurately using this to tell themselves, oh, the top hasn't happened because this list hasn't signaled the top, when in fact it actually doesn't really need to signal the top for the top to be in. That is why in this video I want to look on chain and actually off chain in terms of the things that actually drive this market from different angles, because ultimately we need to look at the cause of why bull or bear situations happen, not the effects. The first indicator I want to introduce you to is actually a combination of indicators all in one that assesses how Bitcoin is doing based on on-chain indicators. This is pretty good at timing the bottoms, which you can see is in red here, and the tops, which is down here in green. Now we are kind of close to the green, but we do have room to still breathe. Now, you don't want to be using this one by itself, while it is a whole bunch of indicators all together. This is one that I think you would want to use in combination with the ones I want to introduce you to now. The first one being a modification of this, which is realized price bands. What this means is we're looking at different cohorts for long and short-term holders and their average buy price. So you can see here we've got toggled the 3 to 6 month holder average buy price, which means anyone who's held their Bitcoin for 3 to 6 months currently has an average buy price of around $113,000. We also have the 6 to 12 month price band toggled, which means anyone holding in this term has actually got an average buy price of around $96,000. Now you can get creative with this and you can actually toggle multiple different bands here, you can see. But I wanted to bring these two up because they have a very interesting correlation that I think does help fuel this bull run. And what that is you can see when the blue line here, so the 3 to 6 month holders, when they begin buying, it usually is towards the lows. Okay, they buy the fear, and now they're buying the fear again. They signal the top when they come together. And when they've come together. Now, it's a really good sign to see these two lines expanding again as they do towards the lows, because what we're seeing here is a lot of new buyers come into Bitcoin who are now the 3 to 6 month holders. This increases their average buy price. Now, this also doesn't negate or avoid any of the 6 month holders turning into 6 to 12 month holders here as those people mature into the longer term cohort, of course, because this line then begins to go up as well. So this really is, in my opinion, a raw gauge into actual positive buy or sell pressure for BTC. When these two touch, of course, that's a sign that buyers are exhausted and we may see price come down. Of course, if it goes below the yellow line, so we're seeing the 3 to 6 month go below the 6 to 12 month holders, that may signal a possible bear market, or again, these buyers are just simply exhausted. The beautiful part about this indicator is that this is looking on-chain. So actual people buying via the traditional methods before the ETFs. So in my opinion, this is more of a reason to believe that some of this money will eventually flow into altcoins through the path to alt season chart. But I think looking more generically at long and short-term holders, because this is pretty important. I mean, I think most of us know that short-term holders, which in this case are people who are holding Bitcoin for under 155 days, they're more the retail money, okay? They're more of the dumb money, not necessarily always the case, but that's kind of how it's interpreted. The long-term holders, in this case, people who are holding Bitcoin for over 155 days, they're more seen as the smarter money. When we go over a certain threshold, you can see here when the short-term holders are in more than 50% profit, we actually do have a cycle top. Now, we have a local top, usually a bit lower than this. So at around 40% profit ratio, you can see here, we do have roughly the top so far in this cycle. That's normally a good time to take some profit, of course, but when this ticks down, like it has recently over here, to around 15 to 20%, this is likely a good time to buy. In my opinion, short-term holders are better at gauging the local tops and local bottoms on Bitcoin and the altcoin market, but I think for the actual cycle tops and cycle bottoms, long-term holders are much, much better. And the reason why is because of charts like this. You can see here, they go into substantial profits because they have such a low cost basis, which right now is around $35,000. But if we zoom in, we can see when this goes light green, it actually does help us roughly time the local tops as well. So in addition to the short-term holders, this may not be a bad idea when the market does recover, which I think it will, to time the next top. Just keep in mind, this sometimes can take place for a month to two, so it's not very accurate. Now, if you're confused about long-term, short-term holders, let's just forget about that and look at the net realized profit and loss. So it doesn't matter what type of holder you are, let's look at the whole market. And as you can see here, the tops usually are formed when this goes into insane profit. So a lot of people are in profit. This has helped us time the tops of this cycle so far, and I think also the bottoms as well. Roughly, we end up landing on around a 1.6 score here. It's happened the last 2 times. We're almost at that level right now, but of course, things can go much lower. So I think much better at timing the tops, at least for this chart, than the local bottoms. But if we do go up, you want to be watching this one as well. Looking into long and short-term holders, I think is invaluable for figuring out what smart or dumb money, so to speak, is doing in the cycle. But truth be told, short-term and long-term holders really aren't smart or dumb money, necessarily speaking. I could be a short-term holder who's just bought 10,000 BTC. I may be an institution who has a really good idea of what market's going to be doing over the next 6 or 12 months because I have a whole team of quants, okay, analyzing markets. But I'm a short-term holder, therefore I'm dumb money. So that's one part of the equation. The other part of the equation you must look into here is large holders. What are they doing? This is why this chart here is so important. This looks at total whale holdings and their total balance here in pink. Now, they have been selling off recently. They were buying the dip. Okay, they sold the top, essentially the 4-year cycle top, which makes total sense to me. They also then started buying as we came down. But ever since we're at the exact bottom, this has just dropped off entirely. I think it might be an internal error. If we add in the 30-day change here in purple, this just kind of puts a number on how aggressive the buying or the selling is. Either way, it's very important to look into the 10K plus BTC holders here, who are the big whales, and these guys have been accumulating a lot on this dip. Now, funding rates in the retail conversation is important because funding rates are looking at longs versus shorts. If there's a lot of leveraged longs, okay, they're paying out the shorters essentially with slight fees. And so we see that this expands up towards roughly the 100% mark. We've had the highest around 94% here. All that means is essentially that we have a lot of leverage longs and people are making money longing the market. When we go into this reddish color here, so below 50%, this mid mark, we actually have the local bottoms because shorters are actually making money. And so in a bull market, it only makes sense that we don't sit here for too long and we continue going higher. That's why you'll hear some people say negative funding rates are actually bullish because it does signal the local bottoms. One of the final things I mentioned here before moving on is the ETFs, and particularly how the ETFs have almost validated this industry for institutions to come on board. And I don't mean buying via the ETFs. I mean institutions getting involved in this market via these things, which are options contracts. Now, this is interesting because ever since January of 2024 here, we've had a massive uptick in options expiring in terms of US dollars every 3 months. So the financial quarters that institutions like to hedge their bets in, of course. And this has been spiked up ever since then. We never saw this amount of demand for options contracts before January 2024, which is why I believe this was one of the main catalysts to cause these guys to come into this market. And ever since then, what I've noticed is when we exceed 50 million US dollars in options expiries for that quarter, we have a sell-off in the price of BTC for that month and even the subsequent months as well. This happened in April 2024, this happened in July 2024, January 2025, and more recently, the massive crash we saw in October of 2025, which had the most overall expiries out of any prior quarter. And so obviously January 2026 is the next financial quarter when we likely will see a large amount of options expiries. I'm going to assume more than $50 million, which means January might be a very volatile month. The reason why is because options contracts take two parties to tango. If I'm an institution who's getting involved with options contracts in crypto, because quarter four is obviously a very bullish month, supposed to be anyway, I'm opening a contract as a call as a buyer, which means market makers have to fill the other side as a seller. And so what that means, if the institutions end up hitting their strike price, if that happens, they make money and market makers lose money. Now, there's other ways in which market makers traditionally hedge their bets to ensure they don't lose all that much money. But in crypto, these guys have the complete control over the market. So that is why I at least believe that every single quarter we see options expiries exceed an amount market makers are not so happy to kind of pay out. They kind of send the price lower. I believe if we continue towards these lows in January, we may not see a large sell-off, likely because if institutions have gone long and they do exceed $50 million in total options expiries, then they've already missed their strike price anyway. But again, keep this in the tank and remember, it could be volatile. Now, as many of you do know, the US business cycle down here is very good at telling us when we're going to have an alt seasonal crypto run, because it essentially is retail-driven FOMO, retail-driven easing in the economy, which means they're spending money, and that money likely finds its way into crypto. So we've been in a state of contraction for the last 3 years, and this indicator, I'm going to leave down below as well, is a great way for us to figure out what may come next for the business cycle. This red and green line here, which are the financial conditions impulse on growth for the US economy, normally leads the business cycle by around 2 to 6 months, and has done a pretty good job of doing that now reliably, at least over the last 10 to 15 years. And so as these continue going higher, this actually gives me more of a reason to be bullish on the business cycle going into expansion, which means, again, money comes into crypto. So keep an eye on these two indicators down here. What about cycle lows? What about in the worst possible case, we go lower? What are the indicators that show us where the bottom might actually be? Well, historically, a very reliable one is the CVDD. This has timed the exact bottom without a hitch every single time, okay? So you want to be using this in addition to all the other indicators I've so far shown you, but this currently is sitting at around $45,000. Now, this line, importantly, does not retrace. It doesn't go down. It either goes up or sideways. One you want to use in combination with that is the balanced price, which isn't as accurate at timing the bottoms, right? Price does go a little bit lower than it most of the time. But again, used in combination with it, you can see here, we're sitting at around $45,000 to $42,500. Long-term holders are a really reliable bottom indicator as well. Price usually goes below their average buy price, which is currently now around $36,000. But again, we have the CVDD and also the balance price to help support a higher price for Bitcoin to fall to. Not to mention as well the 200-week SMA, which you guys can toggle with the following settings in TradingView, of course, for free, is currently at $56,000 as well, which historically, as you can see, is a pretty good stopping point for BTC in the bear markets. In combination with a very strong level of support here at roughly around $48,000, this rough zone here, I think, is a really good stopping point for BTC. In the worst case, we just free fall here. We may see a reversal. This could happen. I'm bullish on 2026, but I think there is a circumstance, something happens, something goes wrong, and we have a sort of V-shaped recovery like this. Now, if we zoom out here, what I have behind this chart is the BTC rainbow chart, which is kind of like the long-term price BTC follows, which does show obviously reduced gains over a longer time period. And again, this would actually fall on this bottom trend line as well, which BTC historically does go to at some point in almost every single cycle. But what about for altcoins? Well, a lot of these indicators do show when things are beginning to slow down in terms of sell pressure and can begin changing into buy pressure. Now, of course, retail fuels altcoins, and I think the business cycle does a fantastic job of gauging when retail actually comes back into markets. So there's no demand right now. This is the supply and demand indicator I've got available for the guys in the private community. We've been red since October of 2022. We've had no demand. We've had no demand in the red period over here, where we saw altcoins go sideways, and also over here as well in 2015. Alts went pretty much sideways with the low liquidity back then. So we were waiting for this chart to turn green like it has the 2 times in this cycle we saw these pumps. At that point, we'll see this chart here, which is the percentage of cryptocurrencies above their 200-day moving average, flip up to the 75% level we usually see they top out at these local highs. And because of the low liquidity that we currently have in crypto, I'm talking the order books are extremely thin, guys. For example, with Solana, we did the math on a recent video. Every dollar invested in Solana, real money invested, it equates to $13 in market cap created. So it's a 13x growth that's artificial. And so you can only imagine what some of these smaller coins are. This is why we see Zcash do a 16x in 46 days. This is why we see the likes of ICP go up a 3.5x in literally 9 days. I do believe this will be a very common theme. These coins follow the business cycle, as we've mentioned. So from the lows in the business cycle to the breakouts of the midpoint here, in the past, ICP went up almost a 5x, up a 2.5x over here. Same thing with Render, went up a 7x, went up almost a 3x at this point as well. So this is the impacts that the business cycle has on money flowing into crypto. So for me, there's no mistaking. If we can observe these indicators and keep a good idea on whether the cycle is on or off for Bitcoin, again, Bitcoin is the most important thing here, because if Bitcoin's in a bear market, alts are in a bear market. If BTC's in a bull run, alts will remain with the chance of being in a bull run. So observe all of these indicators like a hawk, making sure that at least things are still positive, and use indicators like this to forecast when the liquidity will come through for our altcoin positions, guys. Please use the links down below, track this, gain your own conviction. I think over the next 6 to 12 months will be fruitful, but again, hey, that's just my best guess as it stands today. Thank you all so much for watching. I'll talk to you soon. Take care. Bye-bye.